want to go
Oh
over
yeah, they did.
Microsoft and take a look here of what happened. Because when I first took the trade, I thought in my head, there's a possibility these guys are going to run this into demand, and this trade is not going to be fun, right? And I want to go
Hmm.
back to that and think about, what I was seeing during that time. And let's take these off. All right. So things were not looking great. It had been down, I remember, several days, and I was thinking, okay, you know, several days, we should see a pop here, and it just kept selling off. And now when I look at it, I had this demand zone down here, and I kept thinking, okay, well, they are obviously not doing well after it just kept going. I'm like, they are pushing for demand. And this was a possibility that I saw when I took the trade. So we did layer into the trade. The idea was to take the trade into earnings for a run up that could potentially put us up towards 434, 440, 450. All right. So towards this supply zone. So now where we find ourselves is at the lower end of the demand zone, right? We're at the demand zone again, and this is where we want to go. But I got started up here, and now we're all the way down here. So the question is, do I have enough time for this particular trade to work out? Now, Microsoft, I believe I bought the options, like I said, into earnings or past their earnings. So I have 15 November, I have 38 days. So if we come over to the daily, this is going to tell me, okay, earnings are on 1022. 1022. So I bought past earnings, okay? So I have quite some time after earnings. I almost have, it's almost a month after earnings that I actually have in Microsoft. So what you're left with in trades like this is, I layered in, I only have two options, all right, in this trade because it was roughly, let me look at my allocation. This was a run up into earnings, so it's not going to be like a full allocation type trade for me. In that case, and what's really neat on the alerts, you guys can see that because it says small. And if you don't know what small means, you go to our notes and it says API alerts and it explains exactly what that means. Okay. So on these particular options on Microsoft, my first one was at $8.60 and my second one was $6.85. So very poor, far as like where I'm at and my trade price. So my average is $7.72 and currently these are trading at 360. Okay? So they're basically cut in half. That the $7 and change is cut in half, but what I did note this morning is you won't see it here, right? Your first thing that you're looking at here is that, okay, well, we didn't touch demand, John. But if you come down here and you look at the pre market, all right, and we get ourselves into a 4 hour or lower, look what they did. They brought it right into the trendy edge and they brought it right into the demand zone. Now, as a supply and demand trader, I'm going to tell you, I am not closing my position in a demand zone. It's just absolutely not. I'm over that. I stopped doing that a long time ago. It is the biggest mistake. And you could see I could have woke up in fear this morning and said, this is terrible. Because guess what? They had a downgrade. And if you remember, that's like one of the big things that we teach about. Analysts push downgrades and upgrades, and most of the time push downgrades into demand zones with good names. Okay? With good names. And then they push upgrades into supply zones. So you have to be really careful. Actually, one of your strategies can be looking at upgrades and downgrades every single day and looking for names that you're familiar with and then going into the market and looking for supply and demand. Matter of fact, when you see a good name that's been downgraded and it actually pulls back, like significant, you should be looking for an opportunity to look to buy at that demand zone. Okay. So again, Microsoft came in here and then it pushes up. Now, in the big scheme of things, we're up 1%. That's not very amazing. However, the next thing that I want to show you guys that I was thinking about while I was in this trade, while I've been under, is it also turned into a reverse ACDC, which is like, you waking up every morning and you're like, dude, why am I in this trade? I'm literally in the opposite side of what I should be in. Our reverse ACDC trade means this. Once price breaks down below these green arrows, your stops are in above, and you are you are looking to take profit at the ME. This is a perfect reverse ACDC and would have yielded you a lot of money to the downside. All right. So I'm pointing out everything that kind of went wrong and what could go right now. So now we are faced with, will Microsoft continue to move up, and can my trade make it back to where things will be okay? This is not where we hang on to hope, but we just basically look at some facts here. I have 38 days before it closes. We have earnings a month before that, and that earnings can definitely have a big impact on our position. One thing that could happen, and I've seen this so many times, is that price can get, let's say it pushes up to here, and now all of the sudden, or let's say it pushes to here and it kind of goes sideways, then it gets up to here right before earnings. So what happens is that you will be caught between two opposing edges. In this case, that trendy edges identify supply and demand. So you're basically caught between two opposing zones. This would be your supply zone, and down here where your trendy edge is your demand zone. Okay? So we have both of these zones, and a lot of times what they'll do is run price to here, and they may do this where they keep coming back to demand before earnings. This is actually a bullish sign for me. It means they are accumulating before earnings to push into a supply zone. Okay? The next thing they can do is push price now into about midway of the zones. Okay? Midway. So somewhere in here around this gray box again. This will put you in a position where you're looking at your position and going, oh man, well, and I'm just trying to go over some of the thoughts that I think in my head. I'm thinking to myself, like, well, these options actually went all the way down to 2.5, $3, and I was okay then. So why not just hold them into earnings? What I'll tell you with that is, you are you. You should be a good steward of your money. You and I are maybe not the same. My risk tolerance is totally different than yours. As a matter of fact, two options in this trade is really small for my size account. Really small. Okay? So I may be okay with holding these options into earnings and letting them go to zero if they don't work out. I always want you to go back to, what was your original plan? Are you sticking to it? Okay. I added, I think, just a little bit below this, and I was aware that the demand zone was here. And I say to myself this morning, I'm not closing in a demand zone. Okay. So my overall strategy going for the rest of the week and next week and the week after is to say, is it possible that things could work out for me if we continue in a bullish trend here after hitting a demand zone? The way that I do that is exactly how I teach you guys all of the time. And that is looking at Microsoft's ATR. Okay, so average trading range, average true range. I want to get an idea of what it is. So right here, I have these banners that help you understand how much Microsoft's been moving. So on a weekly basis, we could see $17. We could. It's not a guarantee. On a monthly, I could see $36. Okay. Now, one thing also to take into account here is that my options are out of the money. So they can lose a lot of premium if we do nothing. We do have one good thing on our side, though. 38 days, plus we have earnings coming in. And a lot of times, if we could just stay here and slowly make higher lows, our premium won't come off too much because they are building premium for the actual earnings event. And if the market's going to move or there's big things in the market suggesting that we could see a big move, Microsoft will continue to increase on the premium side, helping the position. Okay. The next thing that I want to show you is that Microsoft has gone down 3 weeks. And if we go back and we look 1 year, all right, just take 1 year of data, you could go back. And the way you do this is you just put your cursor right here, look down, it's October. And then I want you to go across until you hit October again. Okay. So we're going to go all the way over here, just like this. All right. So here's October right in here of 2023. All right. So right here, see here. And basically what we're doing is we're getting an idea of what Microsoft likes to do. And I know right off the bat that this is not normal. Normal. 1, 2, 3, 4, 5 up. 1 week down. 1 week down. 1 week down. 1, 2, 1. 1, 2, 3, 4. So in 1 year, we saw 4 weeks down. However, 4 weeks down into a demand zone, then price went up. Okay? Again, prices move into demand zones. All right? So this is not normal. And we could go back one more year. Let's go back here. This is fun. We're going to go here to October timeframe. Let's go ahead and look again. It's about right here. 1, 2, 1, 2, 3. 1, 1, 2, 1, 2, 3, 4. Okay, so there's that 3 and 4 again. We've gotten past that. 4 here, 3 here. We could keep going back. This is something that I was shown a long time ago that really helped me understand, like, what is normal for, your stock that you're looking at, right? Like, what does it like to do? Come over here. Same thing. Take a look at it. 2 weeks down, then we get a big pop. 1 week down, second week down, third week down, then 1, 2, 3, and then 1, 2, 3, and then 1, 2, 3. This is a bad year for Microsoft in here, that's for sure. December, but again, you're noticing there is a repeat process here, right? When it does poorly, we see 3 to 4 weeks. 3 is more common, right? So when I come over here, I feel like I can take that data and tell myself that what's really nice about the 3 weeks down is that it would be different if there was not a demand zone here. Then I could say to myself, we could be looking for a 4th week down, or even a 5th week, or a 6th week. But here we have a demand zone and we have earnings around the corner. Therefore, for me, I'm not selling, I'm holding, and I'm looking to see if we can continue to hold this green box and eventually make our way back up, at least to midway between the two opposing zones, and then I can reassess from there. A couple things I could do right before earnings is that I could sell calls against it and make it a debit spread and reduce my risk going into the earnings. Okay. So that's pretty much like my analysis looking at Microsoft. And I hope that it helps you guys like understand why I wouldn't take a trade off. A lot of it has to do with plan allocation and the fact that we're at a demand zone.